What is good, guys? It's your boy the Sniper Trader, and welcome back to another video, guys. As you can see by the title, today I am going to share with you a simple strategy that you can use to pass your evals phase 1 and then phase 2. It could be with any firm. This strategy helps you to pass the evals very quickly and get funded. So without wasting much time, let me just hop onto the chat and show you how it is done. Okay, so first of all, I gotta record my screen so you can actually see what I'm doing here, right? Okay, boom. Let's screen record. Okay, so we're in, and I mostly trade GBP USD, but for the sake of this video, I want a bear chart, so I'm going to do it on the Euro USD. I want you guys to bear with me here. So now, what do we need in this strategy? First thing that we have to understand in this strategy is that we have to make sure that the trend line we are going to draw should not be very flat and it should not be very straight. Okay, so as you can see here, this is price currently, and I'm going to draw this trend line on the 4-hour time frame. So yeah, those who trade the 4-hour time frame, you can actually follow this with me. If you don't trade the 4-hour time frame, that's fine. You can use this strategy on any time frame that you trade on. Okay, so boom, your trend line should be looking something like this, not too flat and not too straight. Okay, and the next thing that you have to do is to make sure that you are actually having the trend line sit on the candle. You shouldn't draw, you shouldn't let the wick touch, I mean, be on the candle. Okay, we are looking for a body touch, not a wick. Okay, so yeah, you can get the wicks out. Yeah, then what do you do next? You go to uh this one. I mostly use this so that I can draw it in a way that I'm making sure that the wicks are not touching the wicks are not sitting on the trend line. Okay, so we don't, the wicks are basically rejection, so we don't want to include the wicks when we're drawing the trend line. So what I do is to use the line instead of the candle. So with this, boom, you can find it, you can see it, very simple. Then I look for, you see, when the trend is moving, it when we have an uptrend, you're going to get higher highs and higher lows. Okay, so um in this scenario that I'm using, we are in an uptrend, so we are going to get our higher highs and higher lows. Now, for we to get an entry, I have to make sure that I'm getting um, the pullbacks. Okay, so I'm getting the break of the previous higher high, and the market coming back to retest on the previous high, which was, let's say, a resistance. Okay, I hope you're getting me. Let me show you in action. So I take my horizontal line to find these entries. Okay, so I can either mark it here or here, but since we are in a trend line, I'm going to use here. Okay, so yeah, it should look something like this. Okay, good. Now let's look for the others. Let's look for the others. Get my boom. So as you can see, we broke this resistance here. It's not much more of a resistance, but we broke the previous higher high, and then we made another higher high. Then we created a higher low here. We made another higher high, created a higher low here, and the market is still moving. Okay, so yeah, that is how I mark the this. I use these as the entries. Okay, So let's change it back to the candle so you can see how it's looking like. So in something like this, you don't use the horizontal line, you use the triangle, because now it's an area. We don't know the specific. Anytime I'm looking for an entry when I don't know the specific point where price is going to react, I use the rectangle, meaning an area. So it could be anywhere in that rectangle. Okay, so say something like this. I don't, like I said from the beginning, I don't add the wicks. They're basically rejections. Okay, so yeah, as you can see, okay, let me delete this one. As you can see, it's an area now, so price can react or continue the trend at any point in that particular area. So yeah, you can take your trade, you can still narrow it down to a smaller time frame to find an entry, but you can take your trade anywhere from this point. Okay, now what I want you to understand is that before the trend change, there is a market structure shift. Okay, there is a market structure shift and market structure market structure shift. Okay, or a change of character, anyhow you want to call it. Okay, so once you find your change of character, you are waiting for the market to tap into a fair value gap before you enter the trade. So something like this, once we broke from this side, the market was beginning to move from the downtrend to an uptrend. So we broke this side. We were waiting for the market to come back and retest. Okay, so that is where we are going to find our entry. So we're waiting for the market to come back and retest on this side. And there is a fair value gap here. So as you can see, the market tapped into the fair value gaps. When you get the fair value gaps, cool, nice. But when you don't get the fair value gap, that is when you look for something like this, something that I've drawn here, something like this. Yep. So we got the fair value gap and the market keeps on moving. So yeah, that is how it is. That is the simple trend line strategy. So if we want this to play out and get in on a trade with a new trend, let's say we want the uptrend to break to a downtrend before we take our trade, then let's say market still continues, boom, market still continues, tapping continues. Okay, now we are waiting for a break of the trend so that we can take our sell trades. When the market breaks the trend, we get our market structure shift. We are looking for a fair value gap right after the break so we can get a sniper entry from that place. Okay, so let's say boom, we had our fair value gap here, somewhere here. Let's say our fair value gap was somewhere here. Then we are going to take our trade here. We're going to take our trade here because there's going to be a pullback. There's always going to be a pullback after the market breaks a trend line. Okay, so yeah, put that in mind. We're going to take our trade here and then boom, take a sizable or a nice risk to reward ratio, and then call it a day. TP smash successfully. So yeah, that is how the trend line strategy looks like. One thing I forgot to mention as well was the touch points. When do you think the trend line is going to break? Mostly what I use is the 3-point touch. Okay, all of the strategies that I've been trading has the 3-point touch. Okay, once price keep repeating or keep hitting a particular point 3 times, I mean, it's calling my attention, so I have to give it, it's basically part of the confluences I use when I'm trading. Okay, so let's say with this simple one, uh this will be our first point, then this will be our second touch, then the third one is definitely going to break the trend. Okay, so we are anticipating, so like I said, if you don't want to continue with the trend line, if you don't want to continue this trade, then we are anticipating for the downtrend. So the third touch is going to break the trend. Then we make sure we are picking the trade from the fair value gap, and then boom, a sizable, maybe 1:2 or 1:3, whichever way works perfectly fine. So yeah, that is it on the simple trend line strategy. If you want me to go into detail how I actually find this setup, make sure you drop a comment down below and I'll do a second video going into detail. But overall, this is just I'm briefing everything. This is just a simple trend line strategy that I've been using to pass my evals, both phase 1 and then phase 2. So if you want me to do an advanced video on this particular strategy, trend line strategy, then drop it in the comment section and then I'll do that.